Today's program brought to you by
Timing is everything with nitrogen. Weather drives nitrogen need. Weather changes. Your nitrogen plan should too. Adapt-In turns weather, soil, crop, and management data into a field-specific, transparent, and editable recommendation. Inside Field Analytics, you move from recommendation to prescription to applied when the window opens. Trials have shown higher profit potential, lower rates in many cases without yield loss, and lower potential nitrogen loss based on model estimates. Right time nitrogen inside Field Analytics. Adapt-In.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw on Wednesday a mixed day in commodities. Livestock a little bit higher. The Federal Reserve cut interest rates by a quarter point as expected, although the Fed was seemingly divided in that decision. Let's talk about all of this and wade into what's happening in these markets here at midweek. Joining us now, Mike Zuzolo, Global Commodity Analytics. Mike, good to have you back with us here on the show this week. And let's start with that Fed decision. Quarter point as expected, although seeing some of the comments roll out so far seemed like the vote was a little divided. I mean, your perspective on what we got from the Federal Reserve on Wednesday?
Yeah, I think much of it is as expected, Jesse. I think the 2026 cuts are a real question mark now. What I'm hearing is that the Fed is probably going to have enough of a majority to maybe do one more cut, but then they're going to have enough pushback from the other members that it's going to be hard to push another one through before the Fed chairman exits by May. And so this adds an element of uncertainty to the marketplace. And I think it really adds to what we're looking at right here as a major piece of the puzzle, just like it was in 2025 with the tariffs, the US dollar weakening and going down into the end of September and then bottoming once we got into the 1st of October. This is what I'm really watching to see if what you see on this monthly chart in the stochastics, which is I've slowed these stochastics down to hopefully give better buy and sell signals. So I've optimized them based upon major lows, major highs. Now, compliance and full disclaimer, past performance is not indicative of future results, and cycles can and can't work. But what I'm looking at is a sell signal on the dollar index. And so going into this report, going into the end of 2025, going into 2026, where I am feeling more sincerely concerned about jobs because of AI, I feel as though the Fed should be ready and willing and communicate they're ready for as many rate cuts as they need. If they didn't do that on Wednesday, and the press conference is going on as you and I speak, if they don't convey that if asked, I am concerned that this sell signal in the stochastics on this dollar chart will be invalidated and the dollar will break higher out of that wedge. You and I have talked a lot about wedges. We've got a doozy here with this one drawn off the 2025 high and the 2025 low.
Well, and thinking about this, and we'll see where this all goes with the Fed and rate cuts and the dollar, but obviously depending on what the dollar does here, does it break out, does it not, et cetera, that's going to have implications for commodities, for livestock, et cetera, et cetera. So let's talk about that a little bit here, Mike, and let's maybe switch gears as well to bring in the December WASDE report that gave us some updated data. There wasn't a lot of major changes, but there were some changes on Tuesday, and so now we got yet another piece of data points here to influence what's going on in these grain markets, Mike.
Yeah, you're absolutely right. And you just one last thing when it comes to the rate cut and the dollar, and we'll tie this together more as we talk about the crude oil and we talk about the wheat like we have for several months now. I just pulled off an article from December of 1987 from a well-known foreign policy journal, and the title of it is The Coming U.S.-Japan Crisis. As I get ready to do my 2026 outlook in my seminars and my webinars, Jesse, I'm reiterating to everybody that I work with that we have a lot of similarities right now with China that we had back with Japan during the mid 1980s. And there again, the currencies were very, very critical, probably the most critical part, along with the interest rates. And those two go hand in hand. So the last thing I would just say about this Federal Reserve setup that I'm seeing going into 2026 is we're still on track and similar to the mid 1980s, where the interest rates and the dollar will, I think, play a very heavy hand and a heavy role in our prices. So, having said that, yeah, you're right. The world stocks to use ratios versus the US stocks to use ratios really did quite a bit of changing when it came to the soybeans. The obvious exact opposite was the case when it came to the corn in the United States. U.S. wheat and soybeans stayed the same. Corn dropped significantly. And what these two things show us, I think, is number one, the world wheat production number, and the reason we went up to 33.3 on stocks to use ratios was due to almost a 7 million metric ton increase in major competitors' production. And this means we're going to have to rely more upon the wheat being led by the European wheat, being led by the US dollar, being led by the crude, something that's very familiar to the listener, to the viewer, to the program when we get together. The second thing I would say is the trade got it very, very right in the corn versus the soybean demand. The corn ending stocks went down in the U.S. because of the 125 million bushel increase in corn exports. Beans remained unchanged because of no change in exports. Disappointing, but confirming to the trade, the U.S.-China trade deal does not need to have and carry a premium in it. We could still maybe carry a weather premium, but not necessarily a U.S.-China trade deal premium. And so the trade was validated and was proven correct in staying on the long corn, short bean mindset heading into the report.
Let's talk a little bit more about the world corn ending stocks and usage ratio here. And, I think about this corn complex in general, Mike, and where we've been so range bound here as of late, and seeing some of these corn tweaks on the December WASDE report. But then, of course, thinking ahead to the January report, what that's going to bring us and what we'll see between now and then. I have to wonder, do we stay range bound here potentially in this market? There's a lot of interesting things at play, I think, here for corn specifically, even though it's been a fairly quiet market as of late.
Yeah, I think it has too. And you notice the corn market and the crude oil market and the wheat market have all been very, very quiet. And that's really something to keep an eye on. I think the corn continues to be held down by the wheat and overall in 2026 until we get over this oversupply mindset. It's really interesting because within the last 24 hours, both of these reports coming out on Tuesday, the WASDE coming out for the grains, the Department of Energy putting out a new short-term energy outlook, doubling down essentially on an extremely large oversupply of U.S. and especially world crude oil stocks. And so wheat and crude still carry this oversupply burden on their back. And then you look at this chart and you look at the corn stocks to use ratios for the world, tightening even more and going below 2013 because of the U.S. carryover reduction, and Ukraine's crop was cut as well. So all those maps we looked at last year about Ukraine finally came to fruition, 6 months later. But now we're really getting into some serious issues because we're getting those stocks to use levels down now to where we haven't seen them for about a decade. And this is where South American weather comes in. This is where the January crop report comes in. If I'd had one criticism about the USDA report, it was that they didn't address the yield numbers like verbatim. You can keep them the same, but reiterate with some charts in your briefing report that you looked at it again before the January report. Instead, they just took a pass, I think, on the corn and bean yields here for the United States. I still think they're coming down in corn especially. And so this chart really becomes important if we both get a January yield cut in the United States and we're still talking about South American weather in 10 days from now or 15 days from now.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. Let's dive into this weather conversation a little bit as well and talk South America and how this is starting to become a more important part of the conversation. To your point, the next
10 days, the next 2 weeks, by the end of the month, as we get into 2026, this is going to be an increasingly important conversation about the weather story, as it typically is this time of year in South America.
Yeah, it is this time of year. And again, the January crop report makes it even more so important. And I would say, too, Jesse, and this goes back to the trade issues in 2025 heading into 2026 and the currencies. You notice that China came out with their trade numbers for the month of November. They hit a $1 trillion US dollar trade surplus, a new record. And that was with about, I think, around 29 or 30% less US exports coming into the United States from China. And so it really does support the idea that China doesn't necessarily need us like Japan needed us back in the 1980s, and that Belt and Road Initiative that they set up over a decade ago, it's paying off now through this tariff situation, puts more burden on the weather because it could go heavily one way or the other. In other words, if South America has a drought, it leaves China in a corner. If South America comes out with a big crop, it really leaves us more in a corner. And I'm saying that hyperbolically in a way, but I think we need to design our plans for early 2026. What's left in the bin in 2025, selling and acreage for 2026. We want to look at both those extremes because I've not seen a market this extreme in quite some time because of all these elements that we're dealing with right now. And so I think you want to use the Dale Carnegie approach of figuring out what the worst case scenario is and then working up from that. That's kind of what I'm trying to do in my analysis.
And the weather side of this too is that, I know there's some forecasters have said the modeling has been a little difficult lately in South America and more, but you look at a map like this, for instance, you start to see some of that dryness creeping in, and some of the different things that can creep up here that could definitely make a difference, but it's also a bit of a wait and see right now on South American weather, Mike.
100%. And I think this is where, if I had to choose, I would rather have Mato Grosso, Brazil, looking hot and dry because it's your second crop corn and a big chunk of your beans. Southern Brazil doesn't concern me very much when it comes to the corn crop in Brazil, but we have the Argentine pampas. And I can say this drought intensity map, it only goes to 0 to 40 centimeters. It can get cleared up very quickly on one good solid system for a week or 10 days of rains. But in 10 days from now, given where we're at in the crop situation down there, and given the fact that they have had some planting issues, acreage issues in Argentina, it becomes very, very important because we're now in the wet season for these areas as we get ready for January. And if we start out with a dry bias in the second half of December, that could carry us through into early February. I'm no meteorologist, but that's kind of based upon my experience of how these South American weather markets start. They kind of really start in the later part of December.
Something we are going to have to keep an eye on. I want to go to the wheat and crude chart. We look at this quite a bit. You referenced it a few times here already today. Just walk us through this as we kind of button up our conversation on the grains and oil seeds and what you're watching here, Mike.
Yeah, I mean, this is a 4-week running basis and correlation in lead month wheat and soft red winter wheat and lead month crude. This picture was taken before the Federal Reserve came out, and on a 4-week basis, these two futures markets were running almost a positive 97%. So essentially running 1-to-1 in terms of how much they move up and down together. And this really does suggest to you how significant the oversupply mindset, the currencies, the macro, all work together very well in these two markets. And so there are canaries in the coal mine for the most bearish or most oversupplied markets heading into 2026. You can clean these two markets up, then you have something to deal with, I think, Jesse. This is very much in contrast, these two markets very much in contrast to what we've seen in silver making new record highs, following copper, which copper on a tight supply, following gold. And so you've got precious metals in a completely different category, whereas wheat and crude oil are in another category. And so this is where I really want to start my 2026 analysis at, is if we can stay weak in the dollar, that should promote both crude strength and wheat strength. And if not strength, at least not make us go to new lows even though we're talking about supplies that are record high. I've heard the number in wheat, I believe it's 3 billion metric tons of wheat production expected, both by USDA and the UN FAO for the 25-26 marketing year, a brand new all-time record high. So we really do have to address these situations right now and keep an eye on them.
Let's go over to the protein complex and start our conversation talking about the export side of this. Some new updated numbers from the WASDE. What did you see here when it comes to red meat exports?
One day doesn't make a trend, but I was really impressed with the way the cattle and feeder markets were able to turn around on Wednesday on what I considered a very price negative bearish report. The production for 2026 beef, you can see here, I've got the exports and imports, as you say, highlighted, but the production numbers went up about 335 million pounds due to higher weights for 2026 beef. And the net imports, so imports minus exports, net imports went up 460 million pounds. So combined, we went up almost 800 million pounds, or about 2.6% in 1 month in 2026 beef production. And I don't think the market was ready for this, although I think that the way this market has reacted, it would suggest maybe it was more ready for it. So it's really critical now that we've got the Federal Reserve out and they're talking and communicating in their press conference how we close the end of the week out in these commodities. But none of them are more important to me than the cattle right now, because it seems to me the fat cattle have a little bit of resistance right now. I think the packers are going to come in and buy. I'm kind of a contrarian on that, but I see that because I think the beef retail values and the retail demand is still very much there. The USDA said last week that the retail activity number was up almost 5%, and the featuring was up about 3.6%. Even with higher weights, I think the packers are a little bit needing of product. If I'm right about that, then we should be able to finish this week pretty solidly.
And I'm glad you brought these numbers to us here for the show today, because I think sometimes we forget the WASDE does have numbers that impact the protein complex. Let's look at the live cattle monthly chart here and talk about some of the products. You got the choice in here and more. Walk us through just some of this chart action. You mentioned a little resistance maybe in the fats. So what do you see when you look at it from a chart perspective, Mike?
You know, with this chart, and I'm probably giving away a little bit too much to my competitors, but I feel like it's worth it because the stakes in this 2014-2015 issue that I had to contend with a month ago, and I kind of want to go back and readdress some of these issues, because a lot of people kind of fought me on the 2014-2015 situation just because of the cattle supply numbers. And there are differences. I don't not acknowledge that. But what I would say, Jesse, is the cuts are really crucial right now, because we know we've got tight supplies. We know they're going to get tighter. But with high weights and Brazilian beef coming in, we really want to use these cuts as supportive features. And what you see in that orange rectangle back in the 14-15 cycle is both the loin price and the round prices took a nosedive in the first, third, or fourth month of 2015 after going up higher in the case of loins, but the round price actually peaked right with the fat cattle market. And so what I'm seeing now, if you look at today's price action and on this monthly chart, you've got both of them going down, and you've also got the round price really dropping substantially compared to the loin price. We want the round price to come back up around. We want the loin price to go sideways and provide support to this cattle market. Otherwise, we're going to have to rely upon the winter weather, and we're going to have to rely upon the feeder cattle market. And I think that's really crucial to understand at this stage.
Mike, as we close out here today, any final thoughts, anything else you'd reiterate to folks here on the show?
Yeah, I mean, I think the big thing that we keep talking about is the wheat, the crude, and the dollar relationship, and it's hard to get that around your mind around that when it comes to corn and beans. So, you know, pick up a 2-week free trial on globalcomresearch.com, or pick up the phone and call me and say, I want to schedule an appointment and talk about this, walk me through this, because I've got plenty of data and analysis to help this make more sense to you.
Yeah, a lot of nuances to it. Globalcomresearch.com, globalcom with two M's, research.com for more. We always remember that risk of trading futures and or options can be substantial. Mike Zuzolo, Global Commodity Analytics. Always good to hear from you, my friend. Thanks for joining us on Market Talk.
You too, Jesse. Thanks so much for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.